Today, gas stations in multiple states are running out of gas. Customers are rushing to fill their cars after a cyber attack took down a critical pipeline. And do gas lines and rising prices remind you of 1970s stagflation? We talked to Lance Roberts about how bad things could get. And safety officials revealing what they now know about last month's deadly Tesla crash. Was Autopilot involved? That and much more, coming up at NTD Business. Good evening. Great to have you with us. One of America's largest and most important fuel pipelines is still largely shut down. The Colonial Pipeline that runs from Texas to New Jersey was attacked by cyber criminals looking for ransom last week. But it looks like the company isn't willing to pay. Now gas stations in multiple states have run out of gas. You can see long lines of cars waiting hours to fuel up if they're lucky. Others are just greeted by a plastic bag covering the pump.
Many are going to gas stations only to find out they've run out of gas.
Friends of mine, they haven't been able to get gas.
I was talking to a colleague and they said that there's no gas anywhere.
Stations in multiple states have run out, a result of DarkSide's ransomware attack on America's biggest fuel pipeline.
The most affected by the pipelines is Houston all the way to Northeast, right? And I hear about halfway through the North Carolina, that's where your bottleneck goes.
North Carolina Governor Roy Cooper declared a state of emergency on Monday. It suspends motor vehicle regulations for vehicles supporting emergency relief efforts to make it easier for them to help. Meanwhile, Florida's Commissioner of Agriculture and Consumer Services addressed her state on Twitter.
But most importantly, don't panic to buy gas. Don't hoard gas. And don't form long lines at gas stations like behind me. Fuel is continuing to move around our state.
Financial analysts say the shutdown won't have an immense impact on oil prices if services resumes by the end of the week. However, cybersecurity concerns abound.
Think about the electric grid. Think about the natural gas grid. Think about financial services. Think about other industries that could be widely impacted. And because it's the business I'm in, I'm constantly thinking about an attack like this on a financial services, whether it's an exchange, whether it's a big investment bank, whether it's a global investment bank.
The latest update from Colonial Pipeline. While their main lines continue to be offline, some smaller lateral lines between terminals and delivery points are now operational. And their line that runs from Greensboro, North Carolina to Woodbine, Maryland is operating under manual control for a limited period of time. Don Ma, NTD News.
And because of the shutdown, American Airlines is making adjustments to some of its flights. The usual non-stop flight from Charlotte to Honolulu will now land in Dallas, where passengers will switch planes. The Charlotte to London flight will touch down in Boston for refueling. The airline says it's watching the situation closely to ensure they have enough fuel for their network, but Delta Airlines, Southwest Airlines, and United haven't made any changes to their schedules. And someone commented online today that the gas lines and rising prices, or inflation we see, remind him of the 1970s stagflation. Asked Lance Roberts at Real Investment Advice if it's a fair comparison.
Back in the 70s, you had, rising food prices, you had rising oil prices, and that what the Fed misses today, more importantly than anything else, is that when you have rising gas prices, which translate to higher food prices because everything passes back through to food costs. I mean, in order to get food harvested, delivered, transported, etc., it all requires oil prices. So all that gets factored into the price of food at the pump. The price of food at the grocery store. The bottom 20% of income earners, 40% of their income goes to food alone, just because that's the majority of their expenditures. So while the Fed says simply, hey, we're not worried about higher gas prices because that's transitory. Hey, we get it. But your automobile costs are fixed, right? Your monthly car note doesn't change once you buy it. Your house note's fixed every month, or your rent, that doesn't change. What does change for the average consumer, though, is when you have higher prices at the pump, you have higher prices at the grocery store, all of a sudden that extra $1,400 in stimulus you got, or that extra $400 a week in unemployment benefits, gets inflated away, and you actually kind of wind up back where you started. So, I think where the Fed's making a mistake is saying that this inflationary problem is transitory. It probably is, from the standpoint that it's transitory, that inflation will hit the point of where it basically wipes out all the support we've given to the markets. and you start getting a deflationary impact back in the economy due to lower consumption.
What can the Fed do if they were to turn around tomorrow and say, actually, inflation is a big deal? We realized. What can they actually do?
Well, they could do a couple of things. The first thing they could do, of course, is raise interest rates. And the second thing that they could do was to start to taper QE. Now, why would you do that? Well, that would slow, as you increase interest rates, that slows consumption. People borrow less money. They don't go out and buy a house. They don't go buy a new car because the costs go up because of higher interest rates. But unfortunately, as soon as you do that, you create a deflationary impact to the economy, which is exactly what they're trying to avoid. So the Fed has really got themselves into a trap. They spent so long now, keeping interest rates at zero and fueling this bubble in asset markets, that now if they try to extract themselves and said, look, we don't care about what happens with the stock market, y'all are on your own. We're just going to focus on full employment and trying to keep inflation under control. You're going to have a major crash in financial assets, which is going to lead to a deflationary impact in the economy, which puts you right back in a recession, which is the problem they're trying to avoid.
Jerome Powell has been very clear, as you mentioned, is transitory inflation. He says he's not concerned about inflation. We know back in the 1970s, we had something called the misery index, right? We had to add the unemployment number to the inflation number, and you got the misery index. If we focus on inflation, assuming they don't raise rates, how bad do you think it could get?
Well, it depends on a couple of issues, right? So the misery index is a great way to look at this thing because, and again, that's just looking at the cost of inflation as compared to what people have to deal with at home. And so if the Fed does nothing here, right, and they have certainly indicated they're not going to do anything at all, is that you're going to see higher rates of inflation, particularly coming up in the next 2 or 3 months. We're going to see very, very big jumps in inflationary pressures due to not only just the ancillary impacts of what they call the base effect, right? So we're looking at inflation last year versus this year. So we're going to see a big year-over-year comparison jump in those numbers. But also, used car prices continue to soar higher, home prices continue to soar higher, food prices, because of the economic shutdown, the semiconductor shortage, all these things caused by this artificial shutdown of the economy, which should have never happened. Let me be really clear about that. Shutting down the economy was the worst idea ever. I understand they were doing it for a reason they thought they needed to, but you don't artificially impact economic growth by shutting down the function of the economy. And so now you've created this inflationary pressure. Think about like a pressure cooker. And for the last year, we've just been compressing all of these issues in the markets from all these different shutdowns. And now they're all about to get released at one time. And unfortunately, this is going to really put the Fed into a box because, yes, some of this is transitory. The issue of gasoline prices because of the shutdown of the pipeline, the issue of the semiconductor problem, which is a 3-year issue. Those are transitory. But again, for individuals just trying to live paycheck to paycheck, which is a large chunk of the population, it's going to seem like these are very important concerns and they're going to curtail spending, and that's going to impact economic growth.
Lance Roberts, Real Investment Advice. We saw a rocket day on Wall Street today. Major indexes all closed lower, but they were much lower during the day. The Dow fell 474 points, 1.36%. S&P 500 lost 36 points, 0.87%. The Nasdaq dropped 12 points, 0.09%. And the Labor Department today said job openings at U.S. companies jumped to a record high in March, suggesting people aren't coming back to work fast enough to meet demand. Chipotle said on Monday it would hike workers' hourly wage to $15 an hour. That's a sign the worker shortage could add fuel to the inflation we're seeing. CBOE volatility index touched its highest level in 2 months today, and Treasury yields edged up. 10-year notes yield at 1.62%. Oil was higher, and gold remained flat. The global chip shortage seems to be costing car maker Nissan. It posted a record annual loss of nearly $1.4 billion for the first quarter. That's 3 times higher than last year. The firm hasn't made a profit since 2019. It says that business risks like semiconductor and commodity price hikes are an immediate challenge. And Nissan isn't the only company struggling with the chip shortage. Everything from cars to kettles is reportedly short. So now firms heavily reliant on chips like Apple, Amazon, Facebook are joining chip makers to form a new lobbying group. They want the American taxpayer to subsidize semiconductor production. They asked lawmakers to fund the Chips for America Act. President Biden also asked Congress for $50 billion to fund it. Apple says the chip shortage will cost it $4 billion in sales this quarter, and automakers could suffer more. Ford says the shortage could force it to cut production in half in the second quarter. Officials have avoided using a national security law to redirect chips to automakers for fear it could hurt other industries. And carmaker Tesla came under pressure last month when one of its cars crashed in Texas and killed 2 men. Many asked if the car was on autopilot when it crashed. But now U.S. safety officials say it wasn't. NTD's Evelyn Lee has the details.
A preliminary report from the National Transportation Safety Board says that autopilot was not available during the fatal Tesla crash in Texas. The crash killed 2 men back in April and raised questions about Tesla's safety. Local police said they believed nobody was driving when it crashed, but security camera footage captured the owner entering the driver's seat. The Tesla then traveled 550 feet before leaving the road, crashing into a tree and bursting into flames. The accident raised fresh questions about Tesla's autopilot system and its safety. Tesla CEO Elon Musk disputed the initial characterization of events. He tweeted that autopilot could not have been engaged since the street where the accident happened didn't have lane markings. These are needed for the autopilot to function. The NTSB said its tests showed that autosteer was indeed not available on that part of the road, but it didn't draw any conclusions about the cause yet. In addition to the NTSB, the National Highway Traffic Safety Administration is also investigating the crash. It has opened 28 investigations into crashes of Tesla vehicles, and 24 still remain active. At least 4, including the fatal Texas accident, have occurred since March. Evelyn Lee, NTD News.
Google is teaming up with Western Union and Wise for international money transfers. Google Pay users in the United States can now transfer money to users in India and Singapore. And Google wants to make it available in at least 200 countries by the end of the year. Samsung, Apple, and PayPal also offer mobile wallets offering services like cross-border payments and lending. And eBay is tapping into the NFT frenzy. You'll soon be able to list your non-fungible tokens for digital collectibles like trading cards, images, or video clips. NFTs are virtual assets signed by the creator that exist on a blockchain ledger. The creator will usually just issue a limited number of them to make them rarer. You might think, who wants to own a digital collector's item, but they've actually exploded in popularity this year. Fans have already spent huge amounts of money on artwork and other items that only exist online, with some of them selling for tens of millions of dollars. eBay has also said it's open to accepting cryptocurrency as payment in the future. And Germany is banning Facebook from processing user data from WhatsApp. Facebook owns WhatsApp. The data protection regulator there said that the WhatsApp's new terms are illegal. NTD's Patrick Hayden has the details.
Germany's top data protection regulator for Facebook is banning the social network from processing personal data from WhatsApp users. It says WhatsApp's new terms are illegal. The decision follows emergency proceedings opened by the regulator last month. That was after WhatsApp required users to consent to new terms or stop using the service. Germany's data protection officer says the order seeks to secure the rights and freedoms of the many millions of users who give their consent to the terms of use throughout Germany. The ban comes just days before WhatsApp's new terms are due to kick in. Facebook-owned WhatsApp says the move by the regulator rested on a fundamental misunderstanding of the purpose of the update and therefore had no legitimate basis. It says the regulator's claims are wrong and the change of terms update will not be impacted. Patrick Hayden, NTD News, London.
And more bad news for Facebook. Looks like a majority of iPhone users approve of a new security feature from Apple. A report by Flurry Analytics found that up to 96% of all iPhone users in the US have taken advantage of a new software option. It blocks apps from tracking their online activities. 88% of Apple users around the world have done the same. Apple added its app tracking transparency feature to its iOS with the latest update. Facebook criticized the move, saying that it would hurt businesses that used information from tracking to create targeted advertisements. And more companies are joining the vaccine push. Uber and Lyft will offer free rides to vaccination sites from now until the 4th of July. It's part of a new partnership with the White House. It says you can go to the apps, select a nearby vaccination site, and follow the directions to redeem your ride. Uber and Lyft plan to promote the free rides in their apps. The White House wants to get 70% of adults at least one vaccine shot by Independence Day. And also today, CVS says it'll begin administering Pfizer's vaccine to 12 to 15-year-olds after CDC recommendation. Alabama is ending the $300 federal unemployment benefit as businesses struggle to find new workers. It's joining a growing list of Republican states like Arkansas, Montana, and South Carolina. The governor there says the state will stop participating in the all-pandemic unemployment benefits programs funded by federal government starting June 19th. The U.S. Chamber of Commerce has blamed the federal supplemental benefits for weakening the jobs market. The business group found that the $300 weekly boost meant that 1 in 4 workers were making more on unemployment than by working. President Biden said his administration would work with states on requirements that workers can't turn down a suitable job while continuing to collect federal unemployment benefits. An identity theft swelled nationwide during the CCP virus pandemic. This turned thousands of Americans into victims. NTD's Colin Fredrickson has the details.
Although all types of identity theft have grown, the most dramatic increase is in fraudulent unemployment claims. Criminals use the stolen identities to illegally collect unemployment benefits from the government. In many states, organized crime rings are increasingly filing fraudulent unemployment claims. Many people have no idea that their identities were stolen until they receive an incorrect tax form. The U.S. Labor Department estimates that more than $63 billion in unemployment benefits have been paid out improperly during the pandemic. Most of the cases are attributed to fraud. U.S. lawmaker Jackie Walorski hosted a meeting on Monday to examine the ongoing problem of fraud in pandemic unemployment programs.
Let's pause to think about that. $63 billion, a frightening number, larger than the entire budget of the Department of Homeland Security.
And an expert says Texas has over 600,000 cases of fraud so far, and the total value is above $700 million. According to the Identity Theft Resource Center, the most common type of identity theft was government, as opposed to credit card, bank, or loan. And that trend is continuing into this year.
The most notable increase was, in fact, in unemployment identity theft. That is what is continuing to drive contacts into our center. We saw a 4,800% increase.
During the first quarter of this year, the total cases of government documents or benefits fraud exceeded 200,000. 2 years ago, there were less than 10,000.
California's governor plans to give tax rebates of up to $1,100 to millions of Californians. It's part of a broader pandemic recovery plan made possible by a budget surplus.
This time last year, we announced a $54.3 billion projected shortfall. Today, we are announcing a projected $75.7 billion budget surplus. It's a remarkable turnaround.
Individuals and households making between $30,000 and $75,000 a year would get a $600 payment. All households making up to $75,000 with at least one child would get an extra $500 payment. And that includes illegal immigrants who file taxes. The massive budget surplus is largely due to taxes paid by rich Californians, and the proposal also includes $5.2 billion to pay back rent and $2 billion for overdue utility bills. A law passed by voters in the 1970s requires the state to give some money back to taxpayers if the surplus hits a certain limit. Still to come this evening, Bed Bath & Beyond is launching a new line of items, and it could save you some money. And big tech companies growing their footprint in Africa. Locals say it could boost their economies and create jobs. That and more after this short break.
In uncertain times, people rush to buy physical gold and silver. It's strong, solid, dependable. Now is the time to buy from the trusted source, Westminster Mint. With 20 years experience, an A+ BBB rating, and our unconditional 30-day money-back guarantee, Westminster Mint is America's dealer. The best value in gold coins today is this newly released 2021 $50 American Gold Eagle coin, certified a perfect 70 by the world's largest grading service, NGC. At 1 full ounce of pure gold, this 2021 Gold Eagle is the biggest and most beautiful coin struck for circulation. Get yours now while you can at our exclusive low price. Call right now and get the Gold Eagle's perfect companion, the 2021 Silver Eagle, absolutely free with your purchase. With free shipping and a 30-day money-back guarantee, Westminster Mint is America's dealer. Hurry for your early release 2021 American Gold Eagle and free Silver Eagle before they're gone. Call now.
Bed Bath & Beyond says it's launching a line of low-cost, everyday items. The new in-house brand is called Simply Essential. It includes more than 1,200 items like $4 towels and $5 pillows. Bed Bath & Beyond says it's been pricing out some customers who've been turning to places like Amazon and Target for inexpensive home goods. The company adds its private label items are more profitable. And Mattel wants you to give them your old toys. It announced a pilot recycling program Monday called Mattel Playback. The company says it will take your old toys and use much of them to make new toys. Right now, they're accepting items from 3 brands, Barbie, Matchbox, and Mega Toys. You can give your old toys to Mattel by going to their website, printing a free shipping label, and mailing the toys back to the company. Right now, the program is only available in the US and Canada, but Mattel plans to start similar playback programs in other countries soon. And some of the world's biggest tech companies like Facebook, Twitter, Google are expanding their presence across Africa, setting the region's economy up for a multi-billion-dollar boost. Nada Bashar has the story.
When it comes to big tech investment, the giants of Silicon Valley have traditionally looked to Asia. But some of the world's leading tech companies are now shifting their focus to a new market and investing big in Africa.
This is a vote of confidence in the tech industry in Africa. We have seen a lot of innovation coming out of Africa. We've seen a lot of tech startups scale very quickly. They're attracting a lot of funding, and this is driving the interest of the big internet players like Twitter, Google, Facebook, etc.
Twitter is among the latest big tech firms to establish a presence on the continent. The company says it is actively building a team in Ghana, a move that has been welcomed by the country's growing tech industry.
Twitter's coming in is like a seal of approval on the steps that we've been taking so far. We're excited about their coming and hope to build upon that and hope that we can also use them to attract other world-class companies to come and make Ghana their home.
Like Twitter, Google has also chosen to invest in Ghana, launching its first artificial intelligence lab on the continent in the country's capital, Accra. Meanwhile, Amazon expanded its footprint in South Africa in 2020, launching a new web services infrastructure region in Cape Town. Facebook too favoured South Africa for its first office on the continent, establishing its Johannesburg base in 2015, followed by an announcement in 2020 that the company would be launching a new office in Lagos. And more than 3 decades on from opening its first office in Africa, Microsoft has announced its latest endeavour on the continent, working with the Nigerian government to develop the country's high-speed internet infrastructure.
We're hoping that this will create the opportunity for us to learn from each other's experiences and see how digital technology can open up this space, energize our economies, create wealth for our young people, provide alternative livelihoods.
A report by Google and the International Finance Corporation projects major growth in Africa's internet economy, with the potential to contribute nearly $180 billion to Africa's economy by 2025 and more than $700 billion by 2050. It's an economic boost with the potential to create millions of jobs and new opportunities in education and innovation. A winning combination for a continent striving to become the world's next big tech hub.
As the latest business updates for today, you can still catch NTD Evening News with Stephanie Cox at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.